Good morning, guys, and welcome to the Camp Financial Stock Market Update. Alright, so let me try and get this screen set better here. So let's take a look. So the S&P 500, all-time highs yesterday. Early in the day, it hit its all-time high, closed at its closing all-time high, just over 2,400. 2,400 bucks, 2402.27, and the Nasdaq also closing at an all-time high of 6149.67. Let's take a look at the Dow. I think the Dow was up around 22 not too long ago. In just a second we'll pull that up. The 52-week high on the Dow was 21,169, so we're now right there within 1% of an all-time high on the Dow as well. So markets are continuing to run higher as they've broken through all-time highs a while back. They're just continuing to run up, which if you do a lot of research, especially if you research historically when stocks have hit new highs, they continue to run for a while. That's one of the maxims of one of many ways to make money in the stock market. But if you know anything about trend following trading, that's essentially what they're doing. They're looking to find companies that are breaking out to all-time highs. They buy when it's broke through that all-time high, and at that point in time they purchase, and then they let it go. And if you look, I mean, that's been a successful way to trade. I mean, I used not that specific where I'm buying all-time highs, but I'm looking at trend following trading as well, as one of three systems that I use to, well, four now systems that we use to trade and make money in the markets. So, alright, with all of that said, we won't look at the 1 day. Let's kind of go back to the 1 week and see performance over the 1 week. Semiconductors are performing very well. Corvo, Microchip Technology, Broadcom, ticker symbol AVGO, all doing real well. Also in the tech sector, hold on, let me see what this is here. Electronic Arts up almost 16% in the last week. Here again, you got Applied Materials up 6.5%. Nvidia up 30.7%. We'll go back. I want to take a look at Nvidia a little more in detail here in a little bit, so hopefully I remember to get back to that. So let's see, is that the bulk of who's done well? There's another fairly bright green. Regeneron Pharmaceuticals up about 6.5% as well. Marriott International up 8%. And that looks to be most of the bright greens on here. Now let's look at the bright reds. Allergan down 5.6%. Priceline down 4.7%. As well as Alliance Data Systems down 4.6% in that same sector there. Macy's down 19%. Kohl's down almost 6%. Viacom down 7.25%. And Kohl's is going to be another one. We're going to come back to that one as well. Let's see what we got here. Down in the consumer goods areas, you got Sealed Air down 7.3%. Ralph Lauren down 6.76% in the apparel and clothing sector. Not a lot of bright red. We already mentioned Frontier down about 15.7%. Not a lot of bright red in the financials. The financials have pretty flat. Wells Fargo down 3% is probably the biggest laggard in there. And then you got Synchrony Financial in the credit services down about 4.5%. So that kind of gives us a little rundown through the S&P 500. What's up, what's down. A lot of pretty flat companies. So I mentioned a few stocks that I wanted to look at. I already forgot the one. I definitely want to look at Kohl's. And we want to go back to Nvidia as well. Let's start with Nvidia. Alright, I'm going to pull it up here real quick. Nvidia is one that outstanding. I don't know how to put it. So in the last month, let's get this, scroll down here. As I also fight with these companies and their incessant use of video. They're starting to look like the ESPN website on Yahoo. So Nvidia in the last month is up from 98 bucks to 134. If you go to the 6 months, it was at 92. And if we go back to 1 year, so in the last year, Nvidia has run up from about 41 bucks a share, 42 bucks a share to 134. So it's more than tripled in a year. They just continue to blow out their numbers. It's been a pretty remarkable story. It's interesting because it's one that, I mean, if you watch CNBC, you know that Jim Cramer's talked about it, and companies just continue to, put up numbers that are outstanding, and obviously the stock is continuing to run with it. So let's see, we're having an issue with this website. Let's pull up Kohl's if I can get it up here. FinViz isn't helping me either with its big advertisement right in the middle of the screen as well. Alright, so let's look. There we go, Kohl's. So in the last year, Kohl's is really pretty much flat over the year. Up a little bit yesterday, about 1.5%, up 50 cents. Right here is kind of, it's a level that I like Kohl's. Yeah, so a year ago you could have gotten in at 35 bucks, and 35 bucks is kind of my number for Kohl's. The thing to remember, and I have to dig into it more, look at their cash flow and that sort of stuff, but they pay a $2.20 dividend on $37 share value, so that's a 6% dividend. Yeah, I need to dig, like I said, need to dig into it more. I mean, when I looked at it not too long ago, I saw that their earnings are continuing to drop. The earnings per share are continuing to drop. But less than 12 times PE ratio. I mean, you got a company that I think that they need to take some of the dividend back. I think the dividend's got to drop. When the dividend drops, the share price is going to drop. When that share price drops, then you've probably got a buying opportunity. That's kind of how I did my trade in SeaWorld last year. Although I was in before the dividend cut, I felt the pain of it dropping from, I think it dropped from 14 to around 12. Then they cut the dividend and the stock went to 19. So, I mean, it wasn't bad for us. I mean, we definitely still made money on the trade, but, you know, I could see Kohl's doing the same, where they're going to have a dividend cut. They can't continue to sustain 6% dividend yield. So let's take a look. Although I do, again, that's why I like Kohl's at the level that it's at. When you get in a nice dividend like that, and you just let the money compound on its own, it's going to continue to let it reinvest, just continue to grow, and walk away and look at it only when you get notifications that say, hey, something scary happened, you know. Again, earnings drop, etc. That's the kind of stuff that you're going to be concerned about. So with all of that, we got one last thing I wanted to get into, and so I had someone asked me about they're interested in buying a fund, a mutual fund, not too aggressive, but still, you know, aggressive enough. I guess is probably the best way to put it. But something that they want to buy for their kids, to put into investment that they can just kind of let sit and let it grow over time. So what I looked at, and they were looking at the American funds as the fund family that they wanted to go with. So I started looking at it and I thought, all right, well, what makes sense here? Let's take a look. So I did some pretty quick research through all the American funds and found one. You know, in the 3-year, actually, if you go back in the last 10 years, it's trailed the S&P 500 every year. But if you look at the companies in it, I mean, we've got just the cash flow is strong. Their price to earnings may be a little more aggressive than most. But so the reason why the price to earnings multiple is so high is you're talking about the primary holding is Microsoft, number 2 holding is Amazon, number 3 is Broadcom, who we just talked about, AVGO. You got Comcast, Philip Morris, Home Depot, Apple, Alphabet, Schlumberger, and Boeing. Yeah, that's its 10 biggest equity holdings, and that's the American Funds Fundamental Investors Fund. So I like this one. I really like Microsoft is a company that I really like. I think that Microsoft's overvalued a little bit right now, but it's not a company I would bet against. You know, definitely would not short a company like Microsoft. You know, I may sell some put options. That way, if the stock comes down to the valuation where I want to get in, around $60 a share is kind of the number that I like for Microsoft right now. So I'd sell some $60 puts, see if it comes down. If it does, great. If it doesn't, you collect a little bit of income and you move on. So, all right, guys. I know parts of this got fairly technical, with especially, you know, some of those conversations around Microsoft and that sort of stuff. But if you have any specific stock questions, mutual fund questions, obviously, you know, I mentioned the American funds is one that question I just got, so I wanted to bring that up here. So yeah, but if you got questions, send me an email, chrism@campfinancial.net. You can leave me a note on Twitter @cmelick. You can find me on Facebook, or as well right here in the notes on the YouTube channel. So That's it. Take care, guys, and we will see you next time.